Joining me now, Ryan Detrick of the Carson Group. So the backdrop is favorable no matter what happens tonight?
Yeah, Scott, happy election day, and thanks for having me back. We think so, and you had a great 20-minute discussion before I came on, and, what do we know? Well, we had the VIX has obviously kind of soared from almost 15 to over 22 recently. Just yesterday, we saw massive puts being traded, so there's hedging. We know there's a big event coming up. All that negativity, Scott, once we kind of get through the uncertainty election, we get into the weeds of it here. We do think that potentially can be the springboard to a potential another strong November. I mean, let's not forget, November is higher, 11 in the last 12 years. It's just seasonality. I get it. But just look at today's services number. This economy is still strong. This is still a bull market, Scott.
You think we're just on the cusp of a plunge in volatility?
We do. We think so. That's a great way to put it there. I mean, listen, we have not. So the VIX was up around 22 just recently. The last 31 trading days, we've only had one day the S&P moved more than 1% up or down. That was Halloween, the big down day. So you've got all these bets on potential volatility, but we're not having any volatility. I love when Verone joined you yesterday. Chris Verone pointed this out yesterday. I agree. Look at what credit markets are doing. Look at credit spreads. There's no real fear. There's no monster under the bed when you look at the credit markets. Again, there's a lot of worry, yes, but maybe it's undue. And once you get to the other side, you probably are going to, again, get an upward swing. I don't think hate to say it doesn't matter what happens, but once you just get through the uncertainty of this election, we think, the stage is set again for a year-end rally.
But, I mean, I asked the group during the conversation that you were listening to earlier whether the biggest wild card this week was actually Fed risk, not election risk. For the very reasons that you just suggested, backdrop's good, so many foresee the market going higher no matter who wins. The Fed, I don't know. I mean, our expectations have been dialed back. What if they get dialed back further?
You're right. That's a great point. Now, first off, I'll be clear. We do think there's 25 basis points coming. We think there's probably another one in December. I've come on with you all year saying inflation is last year's problem. That's why we don't think we need rates up at 5% because inflation has come back. But that could be the kind of the uncertainty this week that nobody saw coming, right? And the Fed's on a Thursday. I mean, half the people even on your network are saying Wednesday, like it's Thursday this week. They're really trying to throw everybody off when it comes to the Fed. But I'll just put it like this, right? We're up over 17.5% for the year going into this month, into the month of November. All right, all you need to know, listeners, you know this. 14 times this happened. November was higher, 12 out of 14. December higher, 11 out of 14. Those 2 months combined, we're up every single time. 14 out of 14 times. You're up a lot going into these final 2 months. That's just one stat. I'm aware, but I think it's one we would not want to avoid here once we get the Fed out of the way as well.
The other stat that sort of hangs people up is valuation. How are you thinking about the price you're willing to pay for stocks right here?
Yeah, great point there. Valuations are a little pricey, especially large cap, right? I know it came out with you last month. We talked about technology. We are more neutral tech because that's where some of the pricier parts are. When we look out on the spectrum, I mean, I know it's a dirty word sometimes, small caps, right? Small caps are historically cheap relative to large caps. Look what happened last week, right? Stock market was down, is what they told us. Yet small caps were up last week. Small caps outperforming yesterday, outperforming again. We think, again, with a strong economy, small caps, mid caps look good. Also cyclicals, those industrials, financials are still areas that are growing that aren't wildly overpriced, I guess. At the same time, we've all seen the numbers. Valuations, they matter in the very long term. But again, that's why the near term, 6 to 12 months, we're not overly concerned when you have record earnings coming in here, Scott.
You're neutral tech. Why?
Oh, similar to what I just talked about there. It's had a heck of a run, yes. The valuations are some of the highest out there. And again, when we say neutral, people think it means you're bearish. I'll be very clear. The money we run at Carson Group, we have a lot of tech exposure. It's just we're not going overboard with the tech exposure because, again, we think it's some of the pricier parts of the market. We do actually like communication services, which is clearly kind of cousin to technology.
I mean, you're not overweight. Like it's like 30% of the S&P.
Right.
You're just saying exactly. you're not overweight the tech sector.
That's exactly what I'm saying. We are overweight the small, mid-caps, industrials, financials when we look at this kind of the average 60-40 portfolio that we run. But we're not overweight the large tech names at all here because, again, they're the pricier part of this market.